Let's get a check of the markets now. Joining us from CommSec is Tom Piotrowski. Tom, a busy day today, of course, with the rate decision. How is it going to impact markets?
It's a good point, Danica. We'll see a pretty languid start to trade this morning because we had the US markets on a long weekend to have their Labor Day long weekend. So we just had the European markets to be guided by. And what we saw there was a session that was marked by a strong start. The news that we saw out of Asia yesterday was encouraging for European investors because developments in the Chinese property sector, there was a restructuring of a lending agreement on the part of Country Garden, one of the most important property companies in China at the moment, for the fact that it's run into some issues in relation to its liquidity and its ability to pay back its debts. They've restructured a bond that has encouraged mainland property developers in stocks yesterday in Asian trade. That transferred to early sentiment where Europe was concerned, but at the end of the day we had the UK market down by almost 0.25%, the French market down by a similar amount, German market just in negative territory. They're a little bit anxious in Europe because there's a European Central Bank meeting later on in the week, and they're not certain whether or not there will be a rate hike there. So that's what's dominating the thinking. So that leaves us with a negative start and prospect for the local market today, down by about 1/3%, having risen by 0.5% yesterday. US futures overnight have tended to be small positives, small negatives in after hours trade. We've got the S&P 500 futures at the moment just in negative territory. So, yeah, as you rightly point out, Danica, in the headlines there, the RBA is widely expected to leave interest rates on hold. But as always, it's the accompanying statement that the markets will be paying very close attention to. So that will really be where the rub is for investors today.
Okay, a busy day ahead, Tom. Thank you.